This conference will now be recorded.
Can anyone reconfirm me what was the last session's topic? What was the model we were trying to do with? Do any people remember? So how many of them are logged in with the laptop? Can let me know in the chat box. Me. How many of them have logged in the laptop? They can type it as me in the chat box. Is that no one has logged in through the laptop? So the people who have been logged in with the laptop, they can type it as me. The people who have not logged in through laptop, if it is a mobile, so they can type it as mobile. Okay. Okay. So most of them have been logged in through the mobile. Is there anyone who is facing any kind of issues when you are going to get logged in? Is it getting disconnected? So then let us me know in case of any errors if you're finding it. Okay. So let us recall with yesterday's the topic what we were discussing. So it was a transport business model. So in case of buying a bus and we are going to use it for the transportation business. So what is the way of earning the money? So hope the screen is visible to everyone. So can anyone confirm? Is that my screen is visible?
Yes, sir, it's visible.
Thank you for the response. Yes. So yesterday we had been done few of the things. So I just want you people to recollect it what we have been done yesterday. So yesterday we have been seeing that how to prepare the income statement, and we had a small changes in the values also. So for that reason, I've made it once again recall with what all the things we have been done. How did we calculate the income statement? So please have a look, and in case if you are able to solve it, please stop me there itself and you can tell me how you can be able to solve the issues. Okay. So the first thing is how to find the revenue. So we have been filled up with all the assumption values which we have been seen with the document related to this. Okay. So had been made it the changes. It was 450. the ticket charges. Yeah. So a small change had been done based on the values which were available. So in case if I want to move up with this business, so what it could be helpful to us. So that is what we were discussed yesterday. So let's recall with this. So the revenue of this business, it is going to be based on the trips, how many trips and how many collections we are going to have it. So equals to, so we had been given with the details that 35-seater bus, and it is going to be 50% in case if the load factor is, if 50% people are going to get filled up, then you are supposed to charge it each person with 450 rupees. So instead of 450, I'm going to take with the referencing. So you all came to know yesterday by keeping the referencing how it is going to be helpful to us, so that if any changes is done in this data table, so immediately it will get affected to this. Okay. So the 35-seater with the 50% of load factor, and it has been collected 450 rupees, that is per trip, the value how much it has to be collected with the revenue per day revenue. So this is what the formula is, and on each day we are going to travel up to 4 trips. So 4 trips, so this gives a 1 day of calculation. And since we are going to calculate for the year wise, so we are going to calculate it for 365 days. So this gives me the value of revenue with 1 crore 14 lakhs 97,500. Okay. So the next equals to, so here it says there is an escalation rate of ticket price, that is 10%. So we have to calculate the previous year value multiplied, open the bracket, 1 plus the percentage value, and this remains the same for all the years. So in this case I'm going to freeze this cell reference and accept this. So I'm going to get the value of 1 crore 26 lakhs 47 250 as a earnings of year 2. So the same way, if I'm going to calculate it for the other years, so this is what the calculations it is going to happen for the revenue on each year. So the next, as I said, the other income, it is going to be based on the surplus cash. That is, once we finish with the cash flow statement, then with that, whatever the extra cash that is at the starting of the year, any cash is left out with us, on that we can invest it on the other side, and we can earn it out of 5% on it. Okay. So as of now, we are not supposed to do it because we are not calculated the cash flow statement. So the next thing is the fuel cost. So it is going to be equals to, the fuel is costing at 94 rupees into, we are traveling 155 divided by the fuel efficiency is 5 kilometers per liter. So if I am going to calculate this, so 155 divided by 5 will give me how much liters of diesel is required for each trip. So it is going to calculate it. So 94 into the number of the liters of diesels requires into number of trips into 365 days. Okay, so this is going to give me the fuel cost. And as we know that there is an increase of price, that is 15% increment. So we are going to calculate it the previous year into, open the bracket, 1 plus the percentage which remains the same for all the years, and accept the screen. So like this, we are going to calculate it for the other years. The next, maintenance expenses. So equals to, it has been said that there is 10% of the year's revenue has to be considered as an expenses. So equals to that year revenue into the 10%. Okay. Now it also says that there is a 15% increment, that is in the maintenance also it is going to increase with 15%. So in that case it will be equals to, on this there is an increment of, so there is 10% we are going to calculate it. So let me keep this, and this remains same, into whatever the value you are going to get out of this. On this there is increase of 15%, and this also remains the same for all the years. So this is what the value of maintenance cost per year. Okay, the next, the driver cost. So driver cost, it is known as $600 per trip. So into the number of trips it has been traveled is 4 into 365 days. So from the next year onwards there is an increase. So here if you see that there is an inflation rate on driver cost and miscellaneous expenses. So there is a 15% increment. So previous year into, open the bracket, 1 plus the 15% increment, and this remains same. So I'll freeze this. So the next thing is miscellaneous cost. So it is going to be 300 into 4 trips into 365, and this also increases with 15%. So 1 plus, this remains the same for all the years, and so the calculation of miscellaneous cost of expenses for all the years will be done in this way, and the total amount it remains same for all the years. So in this case I will freeze it for all the years into 4 trips, freeze it into 365 days. So this remains the same for all the years. So now finally we are going to find it out. What is the total cost of it? The sum of all these expenses. So I'll drag this. Now, what is the gross profit value we calculate is equals to revenue plus the other income. So we will calculate it later. So, but still we are going to add it now itself so that when we are doing the process, it will calculate automatically. Minus cost of revenue. So this will be the gross profit what we are going to get it. Next, depreciation will be on the asset value into 25%, which is going to be fixed. So this remains the same depreciation value for all the years. Then the interest expense, we are supposed to calculate it with debt schedule. So here the debt schedule value will be the loan amount what we have been taken in the year 0. From the year 1, we are going to take the previous year value as an opening balance. Then yesterday one of our student so gave the answer as PMT calculation, which was correct. So the rate was 15%. Yeah. So it was 15% for the 4 years. Present value is 56 lakhs 25,000. No future value, and it is calculated for the end of the period. Then the interest expense will be for that particular opening balance of the year into the 15%. Then the principal repaid will be EAI minus interest amount. And finally, the debt value of the opening balance minus the principal repaid of that year. So if these calculations are properly done in the first year, and if you drag it for the end of the period, so it is going to give you 0. Okay. So now out of this debt schedule, we got to know what is the interest expenses we are going to have it on every year. So equals to select with the interest expense from the year 1 onwards. Then subtracted with EBITDA minus depreciation minus interest expenses. Now the income taxes considered as a 5%, and it is same percentage for all the years, so we will freeze it. So profit after tax, it is going to be profit before tax minus income tax. Okay, so this was the value what we are going to get it for the profit after tax for all the years. Now, on this, we are going to calculate the balance sheet. So the cash balance will appear only when we prepare the cash flow statement. So for that, we should first prepare the balance sheet, which is interconnected. So cash, let me keep it as 0. So the PPE gross is nothing but the asset value. The asset value is 75 lakhs, which remains the same for all the years. Then the accumulated depreciation. So for the year 0, it is 0. So for the year 1, you have to take from the income statement of that year plus the previous year's accumulated depreciation from balance sheet. So the same way for the year 2, from the income statement plus the previous year value of the balance sheet. So like this, we are going to bring up the accumulated depreciation value up to the same value of an asset at the end of the period. So that if you are going to keep on using it, so the depreciation will be keep on increasing. So the PPA net value will be the PPA gross minus the accumulated depreciation value. So drag this. The last year it becomes 0. So now, as of now, the total asset value will be cash value plus the PP net value. Since there is no cash value, it remains the same with the PP net value only for the total assets. So the next thing is debt value. So what is the end of the year? What are the debts we have it? That is nothing but the UOP debt value. So this remains the same. Okay. So the next thing is the equity. So the equity is the 25% on 75 lakhs. Yes. So this remains the same for all the years. Then the retained profit for the year 0, it is 0. From the year 1, it will be the current year's profit from the income statement plus the previous year's retained profit from the balance sheet, the same as accumulated depreciation. Okay, so you can drag this. Finally, the liabilities will be the total of all this debt, equity, and retained profit. So by using the auto sum function, that is alt equals, so we were able to select all the cells immediately. So you should not forget with your the basic Excel ideas what we have discussed and with the advanced part also. Okay, so the balance sheet is halfly finished, we can say. So except the cash, we have been prepared it. So the next thing is preparation of cash flow statement. So the cash flow statement is simple. What we have it in these two things. So we are going to bring it up in the proper format. Okay. So where do we see this net income? So in which of the financial statement we can find it, the net income? Is it from the balance sheet or is it from the income statement? So at least can try this. Hope everyone are able to see my screen. So at least can let me know that from which financial statement can I bring this value of net income? Is it from the income statement or is it from the balance sheet? So either it is correct or wrong, please try. Okay, so it is from the income statement which we are supposed to bring it. So net income for the year 0 is 0. For the year 1 onwards, from the income statement, you can bring it. And here you can pull this. The next is depreciation. Even this also you are going to bring it from income statement itself, because in the balance sheet we have a accumulated depreciation, but here it has been asked with depreciation value. So for the year 0 it is 0. From the year 1 onwards, so we have depreciation. So the same thing.
Excuse me, sir.
Uh,
Sorry to disturb.
yeah, go
Hello.
ahead, ma'am. Yeah, ma'am. Hello. Hello. Who was that?
Sir, actually, like one of my friends' call got disconnected, sir, and she's trying to join the meeting again, but then she's not able to, join. I think you have to
Okay.
give her
Is
some
she is
access or
getting
something. So she just texted me.
okay? If she is getting any kind of error, you just inquire with her.
So she joined, it seems, sir. Thank you,
Okay.
sir.
Okay. Is it Archana?
I got a message that she was able to join. Sorry. Yeah,
Okay.
yes, sir.
No. Yeah. Fine. Fine.
Thank you, sir. Yeah.
Okay. So the cash flows from operations, it is going to be addition of net income plus the depreciation. Say in the income statement, the depreciation value will be subtracted, whereas in the cash flow statement, we are going to add with it, because depreciation, it is an non-cash kind of expenses. So where you are going to show it there as an expenses, and you are going to recall it once again with this. The next, the capital expenditure. So how much did you spend it on the capital? So we have been spent that 75 lakhs. So what we have been brought it both in the form of debt as well as on the equity wise. So there was no more capital was introduced in the further years. So other years I'm going to keep it as zero. Only in the year zero I'm going to show it as the investment. That is the money has gone from the business. So the same thing it is going to be shown in the cash flow from investment. The next, the debt value. So here, when we are going to calculate the liabilities value, so we are going to apply the formula. That is, we are going to calculate the values from the liabilities debt. So in the year zero, we are going to take the loan. So we have taken 56 lakhs 25,000. So from the year 2 onwards, sorry, year 1 onwards, we are going to pay back that money. So that is the money is going out of our hand. And with that, the debt also it is going to get reduced. So for that reason, we are supposed to calculate it as the current year balance of that debt amount minus with the previous year value. So equals to the current year value is 44 lakhs 98,507 minus with the actual debt value that is of the previous year value. So it is going to show that it is going to reduce at 11 lakh 26,493 for the year one. Then the current year minus the previous year. So it is going to get reduced 12 lakh 95. Then same way for the current year minus the previous year. So in the third year, it is going to get reduced 14 lakhs 89,786. And finally, in the last year, with the minus value. So whatever the left out was there, so it got cleared in the year 4. So now, if you see that the debt was been taken 56 lakh 25,000. So if I take this all this year's value, so here it is going to give me 56 lakhs 25,000. It has been cleared. So whatever the loan amount was there, it has been cleared by the end of the financial year or end of the period. So the next thing is equity addition. So we have been brought the cash. So it was only in the year starting of the business. Okay. So the rest of the year I didn't bring any values. So it is only for the year zero. Now the cash flow from financing value will be addition of both. Okay. So now the net change in cash, that is what is that we are going to get the cash from the three activities. So cash flow from operations plus cash flow from investing plus cash flow from financing. So from these three activities in the year zero, it was zero. And if I drag it to the other years, so this is the cash what we have got it presently with us. Okay. But this is what we have earned out of all these activities. Then is there any balances were there in the previous year so that we can be able to add it? So on the year zero, definitely it will be zero. And end of period, how we have to calculate is equals to that year's cash, that is net change in cash, plus that year's opening balance. Okay, so that should be the cash of end of period value. Now in the year one, what is the opening balance? Means the last year's closing balance will become this year's opening balance. And here the current year cash balance plus opening balance of the year. Then the last year's closing balance only, and end of period will be what you had for that year plus what you have carried from the previous year's opening balance. So like this, I'm supposed to calculate it. The cash on BOP and cash on EOP. So the finally we are going to have the balance of this value. Okay. So now the cash that we have it at the end of the period. So this is going to be the cash balance of all those years. So in the balance sheet, we have left out the cash. So this has to be filled up with cash EOP. So now if you drag this, you should see that the total asset value, what we have it, should match with total liabilities. Okay. So for example, I'll take it the total asset value minus the total liabilities. So this should be 0. There should be no difference between the total assets and the total liabilities. So suppose if I'm going to remove this, see the difference, it is going to be there. And if I'm going to pick it up from the cash flow statement, so both the assets and the liabilities, it is going to be same. So that means the balance sheet is balanced. Okay. So the next thing is, after finding all with this, let us go and find the FCFE, that is free cash flow from equity. So this we are going to you calculate it from the cash flow statement only. So let me take it the net income, so equals to net income, depreciation also from the same statement, capital expenses, so capex, it is already in minus value, then debt repayment or issuance. So all these things we have to add with this. So sum of all these values, so now if I'm going to drag it, so this is what the cash flow to equity, what you are going to get it. So these values are nothing but it is called as free cash flow to equity, and to find this IRR, so equals to IRR, so select all the values and check how much return of investment can be expected with all this model values. So here it is giving you a result of 78.92%, which is equal to 79%. Okay. So what was the changes I made it to get this? So what was the biggest change I made it in my data so that I was able to get from the profit sorry, from the loss to profit. Okay. So I made a changes with the ticket price. So which was before 350. Suppose if I would have gone with the 350 price itself, then I would have been okay. Sorry, once again, there was supposed to be one value to be added. So here the missing value is there, the other income. So I am supposed to calculate this, so which will be equals to the cash on BOP, that is the opening balance, into the 5% income we can earn. This is called as interest income. So with your excess value, you can be able to earn with it. So let us see with this, do we have any more changes? Yes. So with that other income activity, we were being able to make a profit of 82.62%. Okay. So in case if I would have not gone to 450 ticket price, if I have gone with the same price with 350, so then we would have been in the loss, and so the value doesn't show. Okay, it's not going to calculate because the profit here itself it is a negative. Okay, so suppose if I would have changed to 400 rupees, so what it would have been? So with 400 rupees, so I would have been achieved with only a 0.81%. So suppose if there was a 425 rupees, so I would have been earned 46%. Okay, so like this, we are supposed to analyze with what all the possibilities are there in this values. Okay, so a small changes, it is not only a changes, you have to work on it and you can be able to give a statistical report to the management so that it would have been given a lot of changes in their plannings. Okay, so this is how you are going to prepare with an transport business, and here it was included with the balance sheet, with the debt schedule, then also with cash flow statement, and also with free cash flow equity values calculations. Okay, so by this we are going to wind up this model. I'll share this document to you people. So let us have a break of 5 minutes and let us come back and discuss with the another model. So thank you all for being online. So hope everyone got the document on the WhatsApp group. So can anyone confirm whether the document is visible to you people? Is it in the readable format? So is there anyone who is online? So check it out with your WhatsApp group and let me know. Okay, so let me start with another model with small changes. So I'll also share it with one of the case study to solve it by your end. So that as an assignment, I'm going to send it to you. So please try with this. So you should be able to solve this by 21st of Feb. So the assignments are related to a cafe model. So try with this and let me know in case of any kind of difficulty you are finding it if you are doing it. So I'll be giving you one more kind of activities, that is yeah, one more model. So this is a little bit of a challenging wise. Let me give you. It is a simple in doing it, but this is a different kinds of experience you will be having it. So the commonly where the organizations are going to use with these methods. So I think the screen is visible to you people. So can anyone confirm me?
It's not visible, sir.
Okay, I'll just reconnect it. Give me a time.
So the assignment, are we supposed to like submit it or just try it for ourselves?
So yeah, you try it, and I request you people to put it, upload it with your names. So you can rename the Excel sheet, right? So you can rename that Excel sheet with your names and the register number, so that I can understand that you have been practiced with that and you have been uploaded.
So the Bangalore Cave one, right?
Yeah, yeah, yeah. Bangalore cafe model.
Okay, sir.
Yeah. So give me a second. Taking some time. Yeah, now it is getting connected. Okay. So hope you are able to see this. Jashnu, is the screen is visible?
Yes, sir, it's visible.
Yeah. So this concept is called as a Walmart. So in case of pros, in case of any investor is going to come with uh, a foreign kind of a project, so this is one of it. So when we are going to have, which is already running business, so in this case, how we can be able to find out the values and what to be picked up from the data what we are going to have it, and how we can be able to do this calculations from sheet to sheet you are going to do it. So till now whatever we were doing it, it was with a one particular single screen. So we were using it, and we were connecting, referencing it from the one cell reference to another cell reference in the same sheet. So when it comes to the different sheet of data, so how we can be able to connect it, and how you can be able to mingle up with the values, and there are certain uh, calculations, a little bit of changes in the calculations you can be able to find it over here. So it is going to give you a new experience type. Okay, so yeah, so the data also, it has been there in the same workbook, in the first sheet of the workbook. So we have to copy the values from sheet to sheet, and we have to calculate the values from sheet to sheet. Okay, so this we are going to discuss in the next session. But before me starting with this, so I request you people to try with the module what I have been shared it in the WhatsApp. So look into it. It's a simpler one. So I'll just open it once again with those. Yeah, it was Bangalore Cafe. So you have a ready-made data over there. Okay, so here one tip I can be able to give it is, here the values whatever the data you have it, it is for the month wise. You are supposed to multiply with the 12, and you have to calculate the value. Okay, so this is the a tip which I can be able to help you out to solve this problem. Then even here also it's a predefined data which has already been designed it. Only the thing is you are supposed to bring up with the values. Okay, so most of this things it has already been prepared for you, so you can just do the simple calculations over there. It's not so complicated one. Okay, so make use of this and try to solve this and put it with your names on the workbooks. That is, when you are going to save the file, save it with your name and your register number, so that I can understand that who have been attempted on all these things what we have been discussed till today. Okay, and I've been given a very long time also to complete it. So try to make it on Monday, sure. Okay, before the starting of the session, make sure that you are going to get submitted on the WhatsApp group. Is that fine, everyone?
Yes, sir.
Yeah, thank you for the response, ma. Fine. So we are going to wind up for today. So we'll meet up in the next session with the Walmart model. Okay. Thank you all. Have a nice day.